Hey everyone, we all want to find that one small or mid-cap stock that can turn into a future multi-bagger. But the biggest challenge is, how do you separate genuine long-term opportunities from short-term hype? Well, one smart way to filter ideas is to track what India's top mutual funds are doing. These fund houses manage thousands of crores, they have access to management, do deep research, and take a long-term view. When they buy into small or mid-cap stocks, especially fresh positions or big addition, it usually signals high conviction. So in today's video, I'll walk you through some of the most interesting stocks that are being quietly accumulated by India's top performing mid-cap mutual fund schemes. And we'll also discuss why they might be just doing it. I've selected top 3 mutual funds from mid-cap segment in terms of AUM size, and I've shortlisted top 3 stocks from each mutual fund where they've shown high conviction and adding big time. But remember, this is not a buy list. The goal is to learn, analyze, and see what the smart money is betting on. Think of it as your stock research starting point. So let's get started. So the first mutual fund that we are considering is HDFC Midcap Fund. It is one of the top mutual funds in its category, and the first stock where HDFC Midcap Fund is showing conviction is Vishal Mega Mart. HDFC Midcap Fund is consistently adding Vishal Mega Mart since January 25. Initially, it purchased 4.48 crore shares that got increased to 6 crore, then 8 crore, and now 14.72 crore shares in latest July month. In percentage terms, the allocation has increased by 60% in June month. In terms of percentage holding, it has consistently increased from 0 in December 24 to now at 2.45%. Vishal Mega Mart is a recently listed company. It is one of India's largest value retail chain offering affordable fashion, groceries and home essentials. It primarily caters to middle and lower income household in tier 2, 3 and rural markets. Since COVID lows, both its revenue and top line are growing at a very fast rate. Net profit has actually grown 3 times in last 3 years. One of the key reasons for exceptional growth is Vishal Mega Mart targets smaller cities and towns where organized retail is limited. And there is still massive growth opportunity in this value fashion retail where people are increasingly preferring better shopping experience at affordable price point. Today, company has around 700 stores and is targeting to add 80 to 100 stores every year. Currently, it commands a market cap of around 68,000 crore. Although its P looks high, but it's not a right metric because A, company's earnings are growing rapidly at more than 40-50% CAGR rate, and B, your new stores opened by the company would take time to mature. Then second stock where HDFC Midcap Fund is showing conviction is Bosch. HDFC Midcap Fund was holding around 82,000 shares of Bosch in December 24 that got consistently increased to 3.6 lakh shares in latest July month. In terms of percentage holding, it got increased from 0.36 to 1.74%. Bosch is an Indian subsidiary of German multinational company Robert Bosch, which is one of world's leading engineering and technology company. In India, Bosch is a market leader in automotive components, particularly in powertrain solution, mobility services and aftermarket products. Now Bosch is actively pivoting towards EV solution, automation and connected mobility, aligning with the future of transportation. Company revenue and net profit has also grown at a very good rate in last few years. Currently, it commands a market cap of around 1.15 lakh crore with a P ratio of around 52. By the way, if you're wondering from where I'm getting all this shareholding information, it's via Scanex platform, which is our partner in today's video. If you visit their website and go to Insight section, you can find mutual fund holding section that include all buying and selling detail of mutual funds in India. Apart from this, you can also access the heat map that gives you a good overview of market condition in a nice visual representation. You can get the details of all indices across time frame. Then you can also access FIs and DI buying selling information on daily, weekly and monthly basis. This platform is part of Dhan, which is among top 10 brokerages in India. If you have Dhan account, you can get full access to use Scanex absolutely free. If you are planning to start mutual fund or stock investing journey, Dhan platform is absolutely free for you. They don't charge account opening fee, AMC or commission on delivery and mutual fund. For intraday trading, there's a flat fee of Rs 20 or 0.03% of trade value, whichever is lower. For more details, you can explore the link from the pinned comment. Moving on, third stock where HDFC Midcap Fund has done its latest buying is Dabur. HDFC Midcap Fund is consistently buying Dabur since last 3 months from 30 lakh shares in April 24 to 56 lakh, then 75 lakh shares. And now in latest July month, allocation has increased by 159% to 1.8 crore shares, and its percentage allocation has increased from 0.2 in March 25 to 1.44%. Now, Dabur boasts some truly powerful brands like Chyawanprash, Honey, Pudin Hara in healthcare segment, then Dabur Amla, Dabur Red Pest in personal care, then Real and Real Active Juices in food and beverage, along with various brands that it acquired like Maswag, Babool, Promise, Odomos, Oronil and so on. Now, Dabur has been one of the biggest wealth creators in the past, but it has struggled badly in last 5 years with no returns for shareholder. There were multiple factors like prolonged rural demand weakness, unseasonal rains, inflation hit consumers, and inflation in raw material cost that resulted in fall in demand along with margin pressure. However, now rural consumption is improving. That forms a major chunk of Dabur business. Also, Dabur has laid out a refreshed vision targeting sustainable double-digit CAGR in revenue and profit by 27-28. This renewed roadmap is anchored on several strategic pillars, including aggressive brand investment, premiumization, shedding underperforming SKUs, and driving operational efficiency. Currently, it commands a market cap of around 90,000 crore with a PE of around 50-51, which is below its historical median valuation. Second mutual fund that we are considering is Kotak Midcap Fund. Interestingly, the top conviction bet of Kotak Midcap is also Vishal Mega Mart. It purchased 84 lakh shares at the time of its IPO, kept it constant for 3 months, and then started increasing allocation consistently. And now it holds 12 crore shares of Vishal Mega Mart. In June month, it increased the allocation by 130%. Its percentage holding has increased from 0 to now at 2.84%. So two top fund houses in mid-cap category are showing conviction in Vishal Mega Mart. Clearly, it's worth digging deeper. I also find this value fashion retail a very interesting space that I remember covering it a few months ago. Second stock that Kotak Midcap is consistently buying is KEI Industry. October 24 was the first purchase with 4 lakh shares. That got increased to 12 lakh, 16, 18, 21 and now at nearly 31 lakh shares. There's a massive 43% increase in holding in June month. In terms of percentage allocation, it got increased from 0 to 1.36%. There was small reduction in percentage allocation for 2 months, but again it increased to 1.45%. Now, KEI Industry is one of India's leading manufacturer of wires and cables, catering to a wide range of sectors including power, infrastructure, real estate, oil and gas and industrial projects. Both its revenue and profits are growing at 20% CAGR rate in last few years. KEI's strong growth is driven by rising demand from infrastructure and real estate sector, expansion in export, particularly to the Middle East, Africa and the US, then growing retail customer base, especially for housing wire, along with capacity expansion and distribution network scaling. I remember covering this company long back when it was at very low level. Currently, it commands a market cap of around 36,000 crore with a PE of around 50. Third stock where Kotak Midcap Fund is bullish is Swiggy. Kotak Midcap purchased 1.6 crore shares of Swiggy in March 25. That got increased to 2.17 crore, then 3.81 and now 4.13 crore shares. Percentage-wise, allocation has increased from 0 to now at 2.9%. Now, Swiggy is already a household name in Indian food delivery as well as quick commerce segment with its brand Instamart. And the fact that it is second top company in both the domains after Zomato and Blinkit. As far as growth is concerned, Swiggy revenues are growing at an exponential rate. However, company is in massive loss at EBITDA level as well as net profit level. As compared to Eternal, that has managed to become EBITDA positive. However, due to lack of this profitability, Swiggy commands a market cap of around 1 lakh crore at a price to sale of 5.8 versus Eternal that commands a market cap of around 3 lakh crore at a price to sale of 12.4. Although it is debatable on whether Swiggy or for that matter Eternal should command such market cap or not. There's no doubt that quick commerce is a massively growing industry with a huge total addressable market. But at the same time, there are concerns over rising competition. Certainly, it's not an easy call, but Kotak Midcap is showing a lot of conviction in Swiggy at the moment. Then third popular mutual fund from midcap segment is Motilal Oswal Midcap Fund. And first stock where this fund is bullish is Dixon Technology. Its shareholding has increased from 7.35 lakh shares in April 25 to 21 lakh shares in latest July month. In terms of percentage, the allocation has increased from 2% to a massive 10.5% weightage of the portfolio. Now, Dixon has been a poster boy of Indian electronics industry with manufacturing of phones, LED TVs, laptops, tablets, washing machine, CCTV camera, wearable device, and a lot of other stuff. Company has grown its net profit by 10 times in last 5 years. Simply exponential. Also, considering the future demand across electronics component, Dixon is planning to invest 15 to 1800 crore in capex over the next 3 years. The only catch is that it commands a very high valuation due to its exponential growth. Also, one key risk for Dixon is that it benefits significantly from the Indian government's PLI scheme. So, any change, delay or cancellation in this PLI scheme could impact company's profitability. Having said this, there's no doubt that Dixon is the top company in Indian electronics sector with exceptional growth. I remember covering Dixon long back at very low levels. Then second stock where Motilal Oswal Midcap fund is bullish is Kaynes Technology. It recently bought 16 lakh shares of Kaynes in June month and increased it to 19.46 lakh in latest July month. Kaynes is again one of fastest growing company in India and also belong to the electronic sector. Company manufacture electronic products and components that find application in sectors like automotive, industrial, railway, medical, aerospace, IoT and so on. In last 5 years, Kaynes revenue has grown around 8 times and net profits have zoomed more than 30 times. Although the base was smaller in 2020, but company still managed to grow at exponential rate every year even now. Due to this, Kaynes always command a very high valuation. And Motilal Oswal Midcap Fund buying it now suggests that they're expecting more fireworks from Kaynes in the near future. In case you want to understand the Indian electronic sector landscape, I've discussed it in detail in the past. Third stock where Motilal Oswal Midcap Fund is bullish is AB Capital, that is Aditya Birla Capital. It actually made a fresh buy in June month with 3 crore shares that is now increased to 3.39 crore. In terms of percentage, allocation was 2.51%, that is now 2.59%. Now, Aditya Birla Capital is the financial services arm of Aditya Birla Group, which is one of India's largest conglomerate. It is a diversified NBFC that offers a broad range of services, including money management, lending, and insurance solution under one umbrella. Company's revenue has compounded at 19% rate in last 5 years and net profits compounded at 30% rate. As far as growth is concerned, Aditya Birla Capital offer a compelling long-term opportunity as a diversified financial player running on India's growing credit, insurance and investment market. Backed by strong parentage, improving financials and digital scalability, it stands well positioned to deliver consistent growth. Companies command a market cap of around 72,000 crore with a PE of around 21. So there you have it, a deep dive into some of the most high conviction bet made by top India's mutual fund. While that does not mean you blindly copy these ideas, they definitely offer a strong starting point for your research. The key is to study why these funds are buying, what's driving the business, and whether the growth is sustainable or not. Let me know which of these stocks you find most interesting, or if there's any stock you think deserves attention. Just don't forget to like, share and subscribe for more such research-backed content. I'll see you next video. Till then, take care.